Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. I'm here today with
one and only Dan Hussey, everybody.
As per usual, Dan Hussey. Today, we're going to cover some stuff, right, Dan? So what I would like to do is
just some stuff.
Get some clarity and reduce my confusion about being confused. This volatility always kind of whipsaws me around a little bit. As usual, we'll also be digging deep into the grain and livestock markets, especially looking at some of the technicals. And Dan and I hopefully will talk our way through some of the fundamentals within this technical context, looking at ways to maybe best trade and navigate these types of market movements and certainly this level of volatility. And to that end, we'd also like to discuss with you, the 3 or 4 or 5 listeners, one of the first steps one might need to take to avoid margin calls in this environment. That's right. Learn how to avoid margin calls here in 3 easy steps, right, Dan? Before we get started, we want to let you know that if you're interested in hearing about grain market movements and strategies to view daily, you can sign up for our Zaner Ag Hedge hotline hosted by expert market strategist Ted Seifert, totally free, gives you the chance to connect with us personally if you have any specific questions about markets or ag commodities in general. If you're interested in learning more about how this price action works and how to make price action work for you, it's a perfect way to take that first step. Link is in the description below to sign up for that. Totally free, 0 commitment. Dan, what is going on in the Illinois suburbs?
Not much. I mean, it looks like a relatively beautiful day out there. I think it's still only in the 40s.
Looks nice, doesn't it?
Look, yeah, right. You get the sun shining though. You get the. I can see buds starting to come up and stuff. So spring has begun, which is awesome. You know, I'm glad to get out of winter into springtime, and we're going to be talking about planting here, right? And those planters rolling here soon enough. As we all know, the season has changed, and the dialogue has too. Is what's affecting these markets.
I am suffering from some unplanting, suffering severely as a man with soft hands, such as mine, forced to grab a shovel and dig up trees on the estate. And boy, oh boy, you don't maybe remember how privileged or spoiled or weak a man can become until he has to grab a shovel and begin to dig out tree roots. And my body is thinking, what the heck are you doing? We are not accustomed to digging out tree roots, but at the end of the day, certainly invigorating, and even the pain that I have been left with a few days later is beginning to ebb, and I think I'll survive digging out trees.
Wow. I mean, talk about suburban hard life.
Yep. First world problem.
World suburban hard life problem.
I was very interested in growing things.
Hardest part of the week.
Yeah, exactly. Very interested in growing things some years ago, and stopped getting interested in growing things and more about talking to people who grow things. And all the things that I'm not growing have been growing in my garden, and it looked like a little forest. And my neighbors were like, hey, we sure would like for you to not have a forest in your backyard. So I had to get out there and get to work.
Yeah. Well, I'm glad you did.
I'll keep you updated on that, though. That's the exciting thing in my life. That's the most exciting thing in my life is digging out some trees. Dan, we, and I don't want to speak for you, but for me, this level of volatility always kind of freezes me up a little bit, right? And I say, okay, what is the appropriate course of action? Where do we really stand? And it gets difficult. How have you handled, or how have you advised people or suggested maybe they take a look at the way that this volatility is impacting them or their operations?
Yeah, Joe, I would be looking at utilizing options and particularly delta, which I know that Greeks usually freak people out. But the idea of using a hedging strategy that utilizes what's referred to as delta as its focus, that allows us to, to create a particularly useful strategy. And I know that that's a tough thing for most people to swallow when we start talking about the Greeks, but
So
there's definitely lots of options out there.
yeah, it's okay. So really what folks need to know, the first easy step, let's scratch 3 steps and call it one easy step to beginning to avoid margin calls, is to pivot from using futures to hedge with. And certainly futures are the right vehicle for some participants. Some folks may not have the risk tolerance. Some folks may not have the cash. Or some people simply might, because of not understanding what we're talking about here, which is delta, and employing different tools to get to that same level of hedge. They might not do anything, especially in this volatility, which is why it's so important for us to talk about it here, or at least make mention of it today. So, Dan, I had to pull up a quick definition. We've all got the definition in our head, but getting it out of our head along with all that other nonsense, a little difficult. So I pulled up on the old Google, and delta represents the sensitivity of an options price to changes in the price of the underlying asset. So what does that mean? Your delta represents, if you're involved in corn options, how sensitive your corn options price is to the changes in the price of corn futures, right? So it essentially tells you how much an options price is expected to change for every 1 point move in the underlying futures. Dan, why is this the place for us to start, in your opinion? Why start here?
Oh, well, like you said, this is a good time in the cycle, like going into the planting season. We're going to start getting really busy, right? With doing other stuff. So you need to take care of some of that hedging, and what's the most risk tolerant way that you can do so is something we're trying to get at, right? Options right now offer the ability to setting a floor on the way up, right? But keeping some of that upside open at times, right? If you just sell the board, you're going 1 to 1, you're straight sold, and other than a basis movement, right? You've got nothing left. Utilizing delta, and which effectively offers a fractional reownership or fractional sale strategy, right? With certain risk tolerances, that allows you to scale in, so to speak, of how much you want to be sold at times. Right now, like you said, volatility is high. We don't know. Everything's headline driven. Every tweet that is sent out there, every part or time one of the bigwigs is at a podium and opens their mouth, these markets are moving, and we've got every global politician and global mover and shaker out there saying and doing something, and the markets are reacting, right? So the time to be protected is now, right? Because prices are a little bit better than where they were a few weeks ago, right? And that turbulence that we see in the market could mean, yes, higher prices, but it also means that downside could be at risk. And new contract lows can't be off the table when we're moving around this much.
And so we can set aside the concept of the Greeks. I think that would be my suggestion, our suggestion, as we begin to look at this topic and say, okay, we do not want to hedge maybe the way that we have in the past. We're nervous about margin calls under conditions where you can have dramatic swings that, as you mentioned, are headline driven. So your first step is to undertake just a quick study of what delta can represent in terms of your hedging and the ratios that you need. And so specifically, what we would suggest in this case is take a moment. We have an option guide. We send that out to so many people via email, and
And
it
we'd
gives
love to
them.
send it out to
Yeah,
you.
and we could certainly send out, if folks are looking for a quick tutorial on options, that options guide is not just easy to understand, but also rather complete. And then allow us, I think, Dan, you would agree, allow us to have a conversation with you if you're a producer or somehow you're using the tools that are, or you're looking to better use the tools that can be available to you. And in this case, we're talking about puts and calls. Let us help set aside the Greeks. Let us help you focus on what delta means. And to me, Dan, correct me if I'm wrong, but to me, what delta means is how close am I getting A futures position, of course, has a delta of 1, right? For every movement in for every move in the futures, it's just that, right? So if it moved a quarter tick, $12.50, moved a full point, that's $50, right? So what we want to know is how does that translate to our options? And so when we put these option strategies on, I know because I sit close to you and I hear you do it all the time. We're checking the delta on these positions to make sure that number one, we're getting bang for our buck, and number two, that we have these options on in a sufficient quantity to make sure that we're protected, right?
That's right. That's absolutely right. And in situations like, okay, for example, you may have a position that is represented by 10 futures, right? We know that an at the money call represents with a 50% delta, half of that positional position on. So if you did the same amount of calls at the money, you're going to get about half of the one-to-one movement with the underlying futures at the money. Delta then skews the further you get away from the money on either side. It's a bell curve, right? With the highest delta at the money, or excuse me, highest deltas are in the money, but delta skews from 50% at the money to then down to zero the further you get out of the money for calls or puts. And then of course the deeper the money they get, the higher it gets. And it doesn't quite ever get to one, does it, Joe? It
Gets
always gets up
close,
to
right?
that 80,
Yep.
90, right? You got to get really deep in the money. And that's one of the unfortunate things about, long calls or long puts, just long options in general, right? Is that as the market's moving in your favor, you're only getting that smaller amount, but you have that, of course, downside advantage of finite risk, right? The options, you can only lose what the option's worth. So that's the drawback, right? And of utilizing options in general. But delta is a tool or a means of discussing how those options are moving or relative to the underlying, and we can use those to actually develop like a strategy at times. And it's all very, very subjective, and it's hard to be objective when we talk about these things because
Risk
it really comes
tolerance
down to how does it work out in that,
for each
well,
individual operation. Absolutely. Yeah.
ones that I've been doing recently are like, collar strategies where we are in a future position and we'll be long puts and short calls or long puts and short calls. And with the idea being that we're setting, a strategy that against a future position to keep upside open, but have downside risk maintained. And we can actually mathematically calculate out what the delta is of all the options relative to those futures to tell you like exactly how covered you are, so to speak. Anyway, delta gets fun if
Wh-
you like math and statistics.
Which is job number one, right? We want to see in terms of what we are spending for these options, how adequate is our coverage, whether it's to the upside, whether you're looking at rally insurance, going into planting and into the summer growing season, or you're looking to establish a floor and make sure you're covered to the downside. With just quick conversations with folks like us, we can kind of get to a place where
Yep.
somebody certainly understands what the risks are. As you mentioned, there's certain time components, and the fact that you have to work to get fully covered, and then there are the other trade-offs, which are finite risk doesn't change. You go to sleep with the same risk as you wake up with, and which is very, very potentially beneficial in this type of environment that's headline driven and
Well,
rather
especially
dramatic.
when we're talking about turning risk from almost infinite in a way with bushels or in the field where you're completely exposed to price, right, to completely finite with option valuation.
All this to mention, all the reason we're mentioning is that in this environment, it is very easy to say, I'm simply not going to pay attention. And the volatility will drive you away from the screen, drive you away from your engagement in a period where you can precious little afford to do so. Right. It's
Well,
more
and during a
important
period
now.
where we're going to get dragged away by everything else anyway, right? It's field work season. It's planting season. We're going to be doing everything else in a few weeks. And if markets are this crazy and volatile, you got to have your risk managed before you get into that field.
And your team, right? And so here again, this is why folks keep us around so that they can go out and handle the real business of planting and working on machines that break while we handle this side of
That's
the
right.
business and alert them of whatever's going on. Dan, talking a lot about dramatic market movement. How about corn? We opened the week at 456. High was 490 and three quarters. Low was 454 and a quarter. Last trade 490 and a quarter. That's up 30 on the week. 30. Funds long an estimated 90,000 here coming into the day. The thought that crossed my mind when I saw that is funds have 200 to 300,000 contracts worth of bullets should they decide to build a long position here. And just a quick look at that chart that you have pulled up shows that we have come quite a ways in quite a short time.
Amazing.
Yeah.
Amazing how quick, right? We've come up here.
Short covering most of it, huh?
Yeah, you would imagine so. I mean, we put on that big short this whole way down. But I don't, I don't know. Now we're overbought conditions, but we could stay overbought for far longer, right? Than a market can stay, we can stay solvent. We're back above all the major moving averages. I mean, are we now just in a 520 to 440 range for a long period of time? What do you think?
The strength on that chart, I was caught, as we do from time to time, looking at volume, thinking, is this volume declining on this rise in prices? And then the thought crossed my mind that the reason volume may be declining on this rise in prices is that they can't find anybody to sell it. And so in a declining volume environment where people are saying, oh, let's wait and see what happens here, you're getting some significant price appreciation. And normally that would lead us, I'm sure you would agree, price appreciation in a declining volume environment is normally kind of a red flag. But in this case, it might
Definitely is.
In this case, it might make sense as and we speak to them every day, right? And they say, oh, I happen to have X number of bushels of corn, but I think I'm going to hold them and let's see what happens. And so by the very psychology of us, right, or the folks that we assist, you could see where maybe people are kind of sitting on their hands or maybe starting to put in some orders now because they know, like you've mentioned twice, that folks are they're going to be in a cab out in the middle of that farm that is 30 miles down the road, right? And they're not going to be as engaged. But I'm interested to see how this plays out. Great job pointing out the overbought condition. What do you think the result of that can be? Are we due a pullback or?
I mean, we're due for something, right? Like this is a long way up without anything. We only had a 4-day period here in the last major rally without some kind of, pullback to be said, right? So at some point we will. I mean, look for pullback to that 55-day moving average. I'd like to see these other, particularly this 18-day, get dragged on up. And at some point, I feel like we're going to pull back to test them as well. December corn had quite the day as well. I want to point out that it's back above its 50 and 55-day moving averages.
I saw that. Yep. Yep.
But there's really nothing but air until you get back to that old high around 480 for December corn as well. So I don't know. It's really tough to say where we're going to stop because the last time we came up through these levels, we just grinded all the way on up. So why not? Why would it not do it again? Is kind of where I'm sitting for corn. But we are due, right? Like this is a very strong move. We're due for a bit of a pullback. So caution be to everybody that, yeah, I think the pullback should be bought probably, but 460 to 458 here, on a dip would we get interesting for December corn, but we'll see what happens.
Fundamentally, weather for that safrinha corn crop has been rather non-threatening, if not outright helpful. They're coming into a period of dryness. My guess is that all bets are off once it gets dry down there in terms of impact, and the market may be reflecting that. You've got a bit of dryness here in the United States. There is really a shrinking carryout, right? We shrank that carryout the other day. What is in the hands of farmers is in rather strong hands, I would think, financially now. And so it's possible that the market does have to bid higher, auction higher to get that corn out of their hands. Certainly, if we were advising somebody, right, and they had already sold 75% of their corn or 80% of the corn, 80% of their corn. That last 20,000, you might sit here for a minute and wait and see what happens, wouldn't you?
Those are the gambling bushels,
They're
right?
gambling
We're
bushels,
all
sure.
we're all gonna sit on them sitting on something for a better price, right? There's a reason you didn't sell it the last time. You took the opportunity to, right? You want higher. So people are going to be looking for that push above. I think that old high 480 in December corn. May corn, it was up around 420. But that's also, I think, we have to sit here with the reality that maybe there's a bigger range involved in corn,
520
and
you
that
meant, right? 520. You meant
520. I say
520.
420.
Yeah.
Yes, I meant 520. 520 to 440. That's a 80 cent range there. Let's call it 60 to 80 cent range in corn that we could be in for the time being. But needless to say, good strong move up. A buyer potentially, in the dips with the idea that we're going back to the high end of that range, less and above $5 new old crop. And let's see if new crop can't get up to that 480 area again.
Probably going to take weather to make that happen.
I would imagine so. I mean, if we continue to get these rain events across the Midwest, people start talking about that late plant. That could help. Of course, people have talked about the need for a drought and all these other things too. I don't know. But what I do know is that I think we saw one of the most, bearish and pretty, largest bearish for price and largest USDA prints for production we're probably going to see, considering we're not going to, I don't think they're going to up yields beyond trendline yield, which they're already giving us. And acreage numbers seem to be huge already. So, well, how do those acreage numbers get bigger without the price of with prices where they've been, right? We need to go up. We need to
Beans,
go up, particularly for soybeans.
and especially talking
Good
about
leeway into soybeans
right, yeah,
here.
dramatic market moves and maybe buying. I don't know how to characterize it, but it has been a heck of a week for beans. Opened the week at 971 3/4. The high was 1044 and a half, low 969 and a half, and then your last trade 1042 3/4, right at the highs, man. With a weekly change,
and into that 200-day moving average as
right?
well.
Weekly change of 65 3/4. Sweeping weekly reversal on the chart. Funds short 8,000 bean contracts. Wouldn't be surprised to see today's price action bring them onto the positive side. The thought in my mind as I was looking at these change in fund positions over the course of the last week is funds don't stay flat. So if they're short covering in beans, if they're short covering in corn or oil or meal or whatever the case may be, good reason to believe that they have pivoted and the mission is now to establish a long position. Of course, only time will tell, but sweeping weekly reversal here in beans. And we are outside of, what is that, the 200-day there? We're ahead
right
of
up
it?
into that 200-day at
Okay.
1040. We closed right on it at 1042 3/4. Yeah, that's something. And I want to point out, you got a little bit of a left shoulder, right shoulder here. Okay, we got a secondary right shoulder. That was capitulation though, if I, have ever seen it. And you got a head down here. You got a neckline up here around $11, and generally speaking, just a big old range between 10 and 11. So I think right back up in the range will probably go. I want to see that close above the 200-day for May beans to really feel more comfortable. But I was kind of shocked. I wasn't shocked once we closed below the 18-day here, which is this red line. We swept and just took out the lows of that bear flag. Coming all the way back up above that level, though, wow! I mean, look at that. This is like
right?
the further you pull back that rubber band, maybe the further it flies. And this is a rejection to be able to hit a new contract low. Yeah, I wouldn't step in front of this freight train for a bit, mainly because I feel soybeans are so undervalued relative to the carryout numbers we've seen, as well as the acreage numbers we've seen. I mean, we're
There's
not
our
going
fundamentals.
to, right there. That's where this I think comes back to is if that was the most bearish number we saw in terms of acreage, look at what how the markets responded.
So that brings me
Saying
to
it can't get worse than that, can it? That's the floor. Boom.
that brings me to what I consider maybe germane fundamentals as well is that the Chinese have purchased 40 cargoes. I can't remember. Karen was using the number. You've seen it in the press and in some of the work that we look into. A lot of beans here in the last couple weeks from Brazil. The result has been an increase in Brazilian bean prices, while our dollar's decreasing, making these beans more attractive. But then today, Unknown shows up and buys 121,000. Is that what it was? Both new crop and old crop. And so, Dan, I got to wonder if this doesn't signal that, and we talk about this all the time, that the Chinese need those beans. The quality of the Brazilian beans may not be
and
such.
if China's buying Brazilian beans and from Brazil and eating up the global stockpile in one part of the world, this means other people are going to have to come and buy ours. And it's interesting that you saw a country like Thailand today basically turn around and say, all right, 0 tariffs on U.S. Corn. I'm wondering if other countries aren't going to start positioning themselves to start gobbling up U.S. stock, U.S. agricultural products at the prices they are. They're low prices with an attractive dollar. I mean, it's a no-brainer in terms of exports.
What I think this means for the price of beans is that the Chinese are demonstrating that they are concerned about being able to source adequate quantities. They have made substantial purchases from Brazil.
Absolutely.
They're going to turn around and make substantial purchases from the U.S. Some of those, there's been talk that beans from Brazil this year, the quality has not been such that it will withstand longer term storage in China. And so Chinese are buying beans that they're going to have to move through pretty quickly, but then you turn around and get the higher quality bean here in the U.S. That maybe they can store. And so it just shows that all of this political drama aside, the big mission for a good chunk of these folks in China is to find out how they're going to get food to feed those people. And they're right to be concerned about that, right? And so even as you've come into the biggest potential split in thinking or in trade with two great nations, the United States and China, they're still buying, copious amounts of beans out of South America and then turning around and buying beans from us as well. Not a lot, but still buying them from us as well. I think that's a signal.
Right. Yeah, no, I agree. And I think that's the signal that says, hey, that if China's buying them from there, somebody else is going to be buying them from us, if not China. November beans, new crop hasn't quite filled that gap lower there from 10.35 back above the 100-day moving average, though, on a close today is a good look. Same idea, capitulating rejection. This market looks like it wants to head higher. Let's see if it can't get up there to test that 200-day around 1040. Gets there, we should be heading back up to the 1080 area or even above. So we'll see. This is a great recovery for prices. And if you notice today, we were led by new crop, both corn and beans, higher on the board today.
And so this type of sweeping technical upside move where you are rejecting wholly, and you look at this chart in front of us here with beans, the market has wholly rejected all of that downside price action and brought us right back where we were before we started that. And if it wasn't beans or corn or things that, we're prone to see these suspicious downside moves in, we would look at that chart and say, oh man, that's a chart that has a lot of upside price action yet to go because of that rejection of that attempt to bring it to the contract lows. Am I barking up the wrong tree on that?
No, I think you're right. I think you're absolutely right. And you're going to see it. I think it's got room to move back up in the range we've been in for November beans. And then above these, these old highs, it opens the door back all the way back, to 2024 price action. If you look at May, back above $11 opens all the way back up to 12 pretty quickly. So, no, I think you're right. And I think this shows accumulation, down here at value prices for soybeans.
Speaking of that, if you look at, I think it was either bean oil or meal. Let's take a look at oil. We opened the week at 45.10. The high was 47.59, low 43.83. Last trade 47.35, up 151 on the week. Funds are long 11,000 oil. Look, that's what I'm talking about. See that 1, 2, 3. You've got that swing low, and then
how many times is it going to,
two higher lows
that,
here,
man?
Right, two higher lows. And the bean market may be may be the quiet leader here. I look at this chart
I mean,
and
you break this level and we're going, it feels that way. It looks that way.
sure does, sure does,
Could be totally wrong, but hey.
and especially these higher lows, right? So somebody, you just mentioned the word accumulation. Somebody's down there saying, okay, we'll take it before it gets to that low, and then we'll take it before it gets to the previous swing low, and just the trading psychology on that, it doesn't surprise me that we're here at the top of the range, and wouldn't surprise me if we could break out. So that's got to be, if we're going to tie that back to fundamentals, that chart has to be a representation of an idea that this biofuel deal is coming down the pipeline, and the idea that you're going to have much less UCO coming into this country, wouldn't you say?
I would.
Used cooking
I think it's
oil.
pretty right. And I think it's remarkable too that in an environment where crude oil broke below $70 and down below 60,
Absolutely.
bean oil held on up here
Same thing for
and is
corn.
even looking like it wants to break out
Yep.
of the 48 area. And if it does, I mean, you're just back up to 58. We likely go over time, not right away, but very interesting development and bullish if it can break out of these ranges.
Meal opened the week at 283.10. The high was 302, low 283.10. Last trade 299.60. That's up 16.50 on the week. Funds coming into the day estimated to be short 90,000 contracts. My thought that I wrote down, 3 quick words: short, covering, fast. Right. So is that what's happening here?
New low capitulating and then short covering very quickly right back up, V-shaped recovery. We got trend line resistance in 200-day, probably up around that 310 area. So I'm not expecting much in the way of resistance until we get back up there. We're just knifed through the 18-day. We're coming up on the 55 and 100-day here around that 300 figure. We get through there, 310. This looks like what I refer to as an ending diagonal, or what Elliott wave does. It's just kind of like downward sloping triangle like figure that compresses, and then all of a sudden you can see an explosion all the way back up to the high end towards 380 if this thing wants to reverse and go the other way. So keeping an eye on that. Want to see that trend line break and that 200-day closing above there to get really bullish on the meal, and that's where then we get really bullish on the beans too. But I think back up in the range that we've otherwise been in. Okay, period of price discovery higher is what you're hearing me say. Oil, meal, and beans look like they're all in one.
And so for my money, this is why you're poised for a further rally in meal, is because I cannot think of a bullish fundamental. A lot of processors have been having trouble moving that meal, right? It doesn't,
Right.
speaks to certainly what bird flu, exports from your traditional exporters back online. We have just had trouble moving that meal. I think certainly worth fact checking me on that, but we've had trouble moving that meal domestically and had trouble exporting it. Until we figure that out, I'm not sure that meal can rally, or I would be almost betting against a meal rally, which to me, when you get 5 of us in the city here and we all think that meal can't rally, maybe it's time for it to rally.
Yeah, exactly. No, I think that's exactly right. That at some point it's just too bearish and there's value there. Best time to buy is when there's blood on the
There you
streets.
go. Speaking of short covering fast, how about wheat? 530 and 3/4. The high was 556 and 3/4. Low 525 and 3/4. Last trade 555 and 3/4. That's up a whopping 26 and 3/4 in wheat. Feels like we have been here before with these wheat rallies. Funds are short 106,000 contracts of wheat estimated coming into the week. And again, I wrote down short covering fast. It's an interesting chart, isn't it?
Yeah, I mean, just a channel, right? Like short covering it fast. We got back above that 18-day. It seems like once we finally do, the market can get rather explosive or starts this trend higher. Watch out for a move back up to the 200-day, as that's been kind of the move recently. So, that's kind of just the way the wheat's been driving. So we get back above that 200-day and this downward sloping trend line to come in around the $6 mark. We can get really excited about wheat and talk about this $7 and above, but Otherwise, I think it's right back up in the range we've kind of been in this downward sloping trend. New low gave us capitulation. Now we're in a period of price discovery higher to find resistance. We can stay overbought longer than the market, you can stay solvent. So I think back up in this range we go, maybe up towards $6 on the high end. We can talk if we start to get back above there, but
Fundamentally,
580 to $6, I think.
fundamentally, what takes us there? Is it dryness in spots in the U.S.?
Yeah, I think so. Right. I think also more conflict. I think there's a lot of peace talks right now, but the other thing too is like how much lower can wheat go on, if those conflicts, like, the Ukrainian conflicts and other things are kind of coming to a close, hopefully. We'll
Sure.
see. I definitely though think that demand is there. India is becoming a net importer of wheat. That's, I think, the sleeping dog or the sleeping giant here that no one's talking about, is that another billion mouths need to be fed by the global stockpile of wheat here in Asia.
That could be an interesting sea change for this wheat contract.
Yes, very much so. And they've removed all tariffs and anything blocking wheat imports too. So we'll see. It's going to be interesting.
Very interesting. So within the context of and I hate to keep using the word dramatic, but almost insane moves in the stock market, the meat complex, feeders and fat cattle. I was looking at May feeders. April and May kind of changed hands. I switched over to May. Let me know if you think that that's not the right way to go. But we opened at
No,
271.
May's fine. I think I'm watching May and then August,
right? Yeah.
and then in the fats, I'm watching June and October.
So we opened the week at 271 and a quarter. The high was 279.42 and a half. Low 267.20. Last trade 278.70. Up 382 in feeders, and in a week where you saw the stock market just gyrate, right? There was not such a corresponding move in the meat. Certainly there was some weakness, and then there was some strength, or I can't remember if there was some strength and then there was some weakness.
I mean, I think we just saw so much weakness. It was too far too fast, I feel like, in the drop perhaps. And it bounced right back up. The May feeders here did bounce from the 100-day moving average, that upward sloping trend line against the lows, and arguably the supportive resistance area, this resistance you had from the summer months. There was also support there from, back in February. So I think we did come down to kind of test this technically supportive area now on the chart. We're bouncing back up. We have a gap, and the 18-day moving average to look for resistance up at 282, 280, but if we, pressing all the way to a new high from here is definitely possible. But I think, watch out for this area right here. In my opinion, in the short term, going into early next week, if we just go up into there and we turn right out back over, I think you're going to see more of a range here on the chart between 270 to 285 in the May feeders here in the short term.
The inability to get over that gap quickly is going to be a very strong signpost. Or
it's an easy time. Yeah, right. That's absolutely right. It's an easy barrier to watch. It's an easy thing on the chart to say, hey, if they can't overtake that, if it does fail and roll back over, and we find ourselves in this choppy range at highs, yes, it could be a bull flag, but it's also proof that the trend up has been halted to some extent.
Fat cattle switched to June, opened the week 196.20, high was 199.40, low 191.80. Last trade. So to me, that was important, right? Low was 191.80. Last trade was 196.80, up 140 on the week. So really, you had your in June fat cattle, you had your moment, right? And even on that day where they made new lows and took it below the, what is that, the 50?
50. This is the 55-day, but blue, yeah, the 50. They're around 196, 197.
This blue here at 192 came down and took that out, and then at the end of the day, all the way back up. So big daily reversal there, which we may still be under the influence of. And then are we gonna? There's a gap over gap up top here too, right?
Yeah, up there around the 204 area. We came down in that June feeder, tested in the 100-day moving average.
Okay, yep.
Down it. Yeah,
didn't just test it, took it out.
192.77. No, 100-day, we just touched it. Well, we took it out, sure, but we didn't close below it, I
Didn't close
should say, on the
below it.
daily
Nope.
time frame. And we did test into that old high in the springtime and the summertime highs from last year, which is the same supportive area we had back in March and February of this year. So kind of made new highs. This is a market that's moving two steps forward, one step back, two steps forward, one step back, right? We did have a gap that was obviously closed on the chart, but this 55 to 100-day moving average area has obviously been very range bound. I put those two lines on the chart to kind of show you. It's got that double, triple topish up here around the end of that 200 figure, but we're still being supported by the 192s. Other than that, I don't, these lines don't mean anything to me. But the 18-day there going to be resistance up around 201, and like you pointed out, that gap fill up around 204 to 205, similar to the feeders. Let's see if we can take it out and make new all-time highs from there.
Yeah. Yeah. That chart to me looks like we are not going to have to ask for very long where that market is going. It's going to break out of that diamond formation that they're building there to the upside or the downside, and that is going to be that. And it's going to be an interesting week. That is like a proxy. That cattle is almost like a proxy for the reality, right? They can move that stock market around,
Right.
but cattle is really going to tell you, are we anticipating a recession? You know, if you listen to a lot of the mainstream media, even some banks bringing out the idea that recession is imminent, that cattle market's going to tell you what the real story is, isn't it?
Yeah, I think
What
so.
about that dollar
Right,
chart?
but it's also,
No,
yeah,
go ahead.
right.
Go
I
ahead. What
was
were you going to say?
bringing
What were
that
we going
up
to say?
there. I was going to say that, yeah, cattle is definitely right where the rubber hits the road in terms of risk appetite in our agricultural futures. So watch them. If the funds and other people are believers, right, in the economy and other things in Texas, places like Texas Roadhouse keep moving stakes, the cattle charts are going to keep going higher. Yeah, that dollar chart I was bringing up here for us because we are starting to break back below the fabled 100 figure, right? It was old resistance here over the last several years leading up into 2020. We took it out. We've been kind of, honestly, we've kind of had a bull flag above it there for a bit. Now we're starting to take it out and break back below this range low. We slipped back below 100 on that dollar index, and we weaken the dollar up. That's going to be good for U.S. exports. It's going to make them more attractive, and even a 20% tariff can get wiped out if the dollar drops down to 90 to 85, you know? But the point being is that if you go back in time here, we would just be slipping down into the old range the dollar was in, which is fine, but it opens the door for a retest back down to 90. If you break back below that $100 figure. And maybe a retest of that upward sloping trend line that we've been holding since, 2010, around 95. We'll see. But a period of weakness and weakening for the dollar seems to be upon us. Could this be a low? Maybe, right? This is where the support has been, but hey, I'm willing to go out there and say this is the lowest we've been, and this is the most pressure the dollar's been under. New administration, new regime change, all the things. Well, we could see a period of weakening here. So watch the bond markets for a rally in the bonds, weakening the dollar. That's kind of, I think, where the direction this is going.
That will be interesting to watch.
Yeah, well, so, did producer Carter give us a question of the week? Because I think that wraps up the charts and any strategies we have.
I think you're right. And what I would remind anyone listening is that practically speaking, if if we move through these technicals pretty quick, you and I, because that's how we do it, right? If we move quickly and you want to revisit, if this discussion about delta and being able to hedge
That's why we're
with
here.
options,
That's where we can get in touch with us,
the
right?
simple thing for them to do is to sign up, is to head to the website or click the link below and sign up for that Zaner Ag Hedge hotline. There's no cost, right? We talk about this all the time. There's no obligation. Sign up, put your phone number in there, put your email address in. We'll give you a quick shout and say hello. We can cover any of these topics you want to cover. We can still say goodbye and part as friends. We don't demand that you commit to anything. You do not have to do business with us immediately, though we certainly wouldn't talk you out of it. We're happy to have conversations.
And you'd be a fool not
yeah, right.
to.
Yeah, we'd be we're happy to have conversations with you. Sign up for the hotline, and we'll give you a shout right away. Dan, do you prefer coffee, tea, or energy drinks? What is this? This is how would you like your tariff? Yeah. So that's very interesting, right? Coffee, tea, or energy drinks. Do you do any of that?
Coffee and tea. I don't do energy drinks. I mean, I do a little pre-workout before a good old, workout, But no, I actually I like green tea and like decaffeinated herbal teas at night. I'm like an old woman, but I enjoy a good tea in the
No
evening.
offense to any,
No,
no offense to any
but then
women of
we
a
have,
certain age that
you
might
know us,
enjoy tea. Yep.
we do right. We drink more coffee in the office than I think, right.
Sure.
I think we are single-handedly keeping the Colombian and Brazilian coffee, uh, coffee lords at uh, rich and famous. But no, coffee and tea for me, I suppose.
I couldn't agree
I
more.
know you mainline energy drinks.
No energy drinks for me. Absolutely not. But
Oh,
uh,
wrong crowd
yeah,
for energy drinks.
I could see where people might find them useful at this time of the year. Certainly out doing what they're trying to do in the next month. But for me, it's usually just coffee. I could get a little snobbish about coffee from time to time, but most of the coffee I think that I drink.
You have been known to bake your own, or I'm sorry,
Yeah.
take us through roast your own coffee
I'll
beans.
cook it right up there in whatever fire you got. Yep, to get those coffee beans to where they need to be. But lately, some green tea doesn't hurt anybody, right?
I like green
little
tea,
matcha
man.
tea,
I really like it.
little whisk.
I really
And
like
it's
it.
so good for you. So yeah, a little bit of coffee.
Right. I'm in it for the antioxidants.
There you go. That's a perfectly good explanation for drinking as much stuff as we do. Dan.
Well, thank you. Thank you for listening to the Zaner MarketCast today. If you need more just because you can't get enough of us, you can follow us on Facebook at Zaner Ag Hedge and on Twitter and LinkedIn at the Zaner Group. If you have a question you'd like to have answered right here on the show, there's a link for you to do that just in the description below. You follow the instructions and we'll get an answer for you on air. Thank you again, and be sure to like, comment, and follow the podcast to not miss a beat. And we'll be back with you as price action develops.
Have a great weekend, everybody.